All right, everybody, here we are again for the weekly newsletter. I want to kind of bring you guys a subject matter expert and insider in terms of the mortgage side of real estate. As you know, interest rates have been relatively high over the past multiple months, and you're starting to see banks kind of come alive and try to provide different products or options for buyers to making it easier for them to get into homes considering the highest interest rates. And we've talked about a few things before, some things like a 2-1 buy down, different types of ARM mortgages and stuff like that. But I want to kind of get you in with somebody who talk at a high level and talk specifically about what they're doing at their bank. And I brought in Jeff Williamson. He is a good friend of mine and a mortgage lender and a wealth of knowledge, over 15 years of experience in the mortgage lending business, working for a regional bank here out of St. Louis that has a specific branch here in Omaha and services a number of clients and has a great new product that they're presenting. So without further ado, let's pull up Jeff on the full screen here, and you guys can hear what's going on over at Belay Bank. Jeff, take it away, man. Thanks for being here.
All right. Yeah, appreciate that, Tyson. Yeah, kind of as you mentioned, obviously my name is Jeff Williamson with Belay Bank here in Omaha. We are a regional bank, as you stated, headquartered out of St. Louis, Missouri. We service all of our own loans. And as you mentioned, with banks getting a little bit more creative in this market, we have a lot of portfolio products, and one that we just launched here this week to become a little bit more attractive as far as rates go. So what we've come up with is a way to get a rate down for people as low as 5.875 if they qualify right now. As you know, rates are around 7.5% on a 30-year fix. So getting a rate below 6% for 2 years is something that can definitely make making that home purchase a little more affordable right now in this market.
So one thing that you mentioned is that we got a rate of 5.875. So how long does that last for?
That is for 5 years.
Okay.
And so
awesome.
The rate is fixed for 5 years, and then like any other traditional ARM product, at the end of the 5 years, it has a margin on it, and it would then adjust accordingly once a year. Now, what I would tell you is that rate's fixed for 5 years, but there's no prepayment penalty on that loan. So if you wanted to buy a house today, have a rate below 6%, and let's say in 2.5 years, 3 years from now, rates go down to 5%, 4.5%, whatever, you can refinance at any point without any prepayment penalty.
Okay, that's awesome. So big news there. That's a huge difference. We've heard a lot of products with 2 or 3, 2, 1 buy down, but this is a fixed rate for up to 5 years with no prepayment penalty. That's big news at a 5.875. I think that's the lowest I've heard of in the marketplace to date in my experience. So that's awesome. Now, is that going to cost the buyer more money, or is it worked in the loan? How does that work in terms of the closing?
Yeah, so there is a cost, obviously, with everything. So to get that rate of 5.875, just like the 2-1 or 3-2-1 buy downs you hear about, there's a lot of seller paid costs to buy that rate down and the deferred interest over the 2 or 3 years. Okay. Well, ours works different because we're buying that rate down to 5.875 for those 5 years, like we discussed, and there is 2% of the loan amount that would have to be charged at closing. So if you had a $200,000 loan, we're talking $4,000. Okay. That can be paid for as you negotiate with Tyson as seller paid costs, awesome. Paid by the buyer, paid by both. A lot of ways to get it done.
Awesome. So just to reiterate that, what I'm hearing is, yes, there's a cost, just like with anything, and we have to pay to use a mortgage. However, we can negotiate that additional cost and potentially move it over to the seller at closing and write that into a contract. Correct?
Correct.
All right.
Yep.
And so one thing I want everybody to understand with this, which I think is really important, is that's this time of year right now, with the market being slower than normal and seasonally slow, on top of having fewer houses in the market and also less buyers in the pool looking out there, you as a buyer are more apt to find sellers willing to do this for you right now. We are seeing seller paid costs coming back into the marketplace, and now this can be one of those things that the seller pays for, alleviating this additional out-of-pocket cost for you at closing and moving over to the seller's responsibility, which I think is a huge win for buyers out there in the market right now at all levels, whether it be first-time home buyers or they're buying their forever home. But this is a huge deal to really cut down the monthly cost for a minimum for at least the next 5 years, correct?
Yep, absolutely. Awesome. it just gives a little bit longer security at a lower rate, Tyson, because there's a lot of speculation and nobody knows where we're going with rates. Everyone has predictions, and there's been a lot of people that have been off as we've gone through this year. So is it potential that everyone's going to refinance in 2025? Maybe, but maybe it doesn't happen. So this secures you a rate below 6% for 5 years.
Is there a time limit that Belay is offering this incentive?
We have not put an expiration on it as of yet. So we've pooled some money aside for it, and we're just going to kind of see how it goes. But as of right now, there is no expiration on the promotion.
Well, then the last thing I'll add in there to this is, for those of you out there that maybe might want to have a longer conversation about this, definitely reach out to me and get you in touch with Jeff, and we can have a conference call. But also, these are things that you definitely want to act on faster rather than not, because they can go away at a moment's notice, because these are special products specific to the bank or the institution providing them. And also, the only way you can lock in a rate is to have an accepted contract. So in order for us to get this rate and locked in for you, this product, is you actually have to accept an accepted contract on a home and agreed on by both parties. And then we will submit this to you, and you can say, yes, we can do this for you. We're going to go ahead and then we're going to negotiate all the terms from there on out. So definitely early bird gets the worm on this, but it sounds like a great product that is worth knowing about, and something different than the 2-1 buy down, a little shorter term, a little harder to wrap your brain around. This is a simple 5-year ARM with a no prepayment penalty at a really great rate.
Yep, couldn't agree more.
Awesome, man. Well, thank you so much, Jeff, for coming on here, and I can't wait to field some questions about this and hopefully get some folks in this product that might need this solution for them.
All right, thanks, Tyson.
Thanks a lot. Appreciate it.